Hey everyone, it's the Cognitive Trader here, and in this video, we're going to go over the bearish and bullish engulfing bar candlestick patterns. So the engulfing bar, as it states in its title, is formed when it fully engulfs the previous candle. The engulfing bar can engulf more than one previous candle, but to be considered in an engulfing bar, at least one candle must be fully consumed. The bearish engulfing is one of the most important candlestick patterns. This candlestick pattern consists of two bodies. The first body is smaller than the second one. In other words, the second body engulfs the previous one. So in this illustration below, we have a bearish engulfing bar. So as you can see, the first candlestick is bullish and it's small. And then the second candlestick bar is bearish and it's larger. It has a large body, which is larger than the smaller body, and it engulfs it. So this is how a bearish engulfing bar pattern looks like on your charts. The candlestick pattern gives us valuable information about bulls and bears in the market. In the case of a bearish engulfing bar, this pattern tells us that the sellers are in control of the market. When this pattern occurs at the end of an uptrend, this indicates that buyers are engulfed by sellers, which signals a trend reversal. So in this example below, you see that we have a uptrend, and then within the uptrend, we have an engulfing candle, a bearish engulfing bar, and then the trend reverses from an uptrend to a downtrend. As you can see, when this price action pattern occurs in an uptrend, we can anticipate a trend reversal because buyers are not in control of the market. And sellers are trying to push the market to go down. You can't trade any bearish candlestick pattern you find on your chart. You will need other technical tools to confirm your entries. We will talk about this in details in the next chapters. Right now, I just want you to open your charts and try to identify all bearish candlestick patterns that you find. All right, so the next engulfing bar pattern is the bullish engulfing bar. The bullish engulfing bar consists of two candlesticks. The first one is the small body, and the second is the engulfing candle. So in this illustration, we have a bullish engulfing bar. We have a small body, which is bearish, and then we have a large body, which is bullish. The bullish engulfing bar pattern tells us that the market is no longer under control by the sellers, and the buyers will take control of the market. When a bullish engulfing candle forms in the context of an uptrend, it indicates a continuation signal. When a bullish engulfing candle forms at the end of a downtrend, the reversal is much more powerful as it represents a capitulation bottom. So in the example provided for us here, we can see that we have a bullish engulfing bar off of a downtrend, and then we have the trend reversing into an uptrend. The example above shows us clearly how the market changes direction after the formulation of a bullish engulfing bar pattern. The smaller body that represents the selling power was covered by the second body that represents the buying power. The color of the bodies is not important. What's important is that the smaller one is totally engulfed by the second candle. Don't try to trade the market using the price action setup alone, because you will need other factors of confluence to decide whether the pattern is worth trading or not. I will talk about this in the next chapters. What I want you to do now is to get the skill of identifying bearish and bullish engulfing bars on your charts. This is the most important setup for the moment.